Hello everyone, welcome back to the channel. This presentation is brought to you by Synergy Business Advisors, Noida, your trusted business mitra providing complete business solutions. Let me start with a very practical question. What happens when suspended directors refuse to cooperate during CRP? No records, no explanations, and then they argue that the resolution professional has no evidence to proceed against them. Can such directors escape liability under Section 66 of Insolvency and Bankruptcy Code? NCLT New Delhi has given a very clear answer in the case of Rana Sarkar versus Bimal Agrawal, resolution professionals of Dagcon India Private Limited. Let us understand this important ruling. Before we go into the case, let me briefly explain Section 66 of the Insolvency and Bankruptcy Code. Section 66 deals with the fraudulent and wrongful trading. It empowers the resolution professional to file an application against directors or persons in control of the corporate debtor if the business was carried on with intent to defraud creditors, or the directors knew or ought to have known that insolvency was unavoidable but still continued the business and caused loss to creditors. Case background: Dagcon India Private Limited entered into corporate insolvency resolution process. During CRP, the suspended directors failed to cooperate. Proper books of accounts were not handed over to the RP. No satisfactory explanations were given for multiple financial transactions. Faced with this situation, the resolution professional relied on the corporate debtors' bank statements, certain suspicious and unusual entries, a transaction audit report. Based on these materials, the RP filed an application under Section 66 of the IBC for fraudulent and wrongful trading. Arguments by suspended directors. The suspended directors challenged the application and argued that there is no direct documentary evidence. RP's conclusions are based on assumptions. Bank statements alone cannot prove fraud. Therefore, a Section 66 application is not maintainable. In simple terms, their defense was, since we did not give records, the RP has no proof. Key findings of NCLAT. The NCLAT New Delhi completely rejected this argument. The tribunal held that non-cooperation by suspended directors cannot be used as a defense. When directors withhold records, the RP is entitled to rely on available financial data. Bank statements are primary evidence of fund movement. Suspicious entries, when supported by a transaction audit, are sufficient to form a prima facie opinion. Most importantly, the NCLAT clarified that at the initiation stage, the RP is not required to conclusively prove fraud. A reasoned opinion backed by financial trail and audit findings is enough to file a Section 66 application. Legal principle laid down. The NCLAT clearly laid down that in the absence of cooperation and records from suspended directors, the resolution professional's opinion based on bank statements, suspicious transactions, and supported by a transaction audit is sufficient to initiate proceedings under Section 66 of the IBC. This means directors cannot benefit from their own non-cooperation. The insolvency framework will not be frustrated by deliberate silence. Why this judgment matters? This ruling is extremely important because it strengthens the authority of resolution professionals, prevents deliberate obstruction during CRP, engages effective transaction audits, sends a strong message that withholding records is not a safe strategy. That is a wrap on this landmark NCLAT ruling under Section 66 of the IBC. For promoters, directors, and insolvency professionals, this judgment clearly reinforces that fraud cannot be written off through accounting adjustments, and substance will always prevail over the form under the IBC. This is C&IP Praveen Agrawal. Thanking you for watching. I hope this presentation will be helpful for you. Please subscribe to the channel for such and more informative videos.